Today is Wednesday, August 29th, and this is the Morpheus Trading Group Daily Stock Pick video. Today we're going to change things up a bit and show you how we use the moving averages to identify the strength of an uptrend, which is a very important analysis in our style of trading, as we like to swing trade in the short to intermediate term. So our primary focus is on the 50 and 200 day moving averages, and that they are pointing in the same direction when we put on a trade. We're going to use the chart of AOL as an example of how we use the moving averages to identify the strength of a trend. And of course, we're looking at our new stock screener, which is in beta mode and free to the public at screener.morpheustrading.com. So let's take a look at AOL. And we're going to zoom out a bit on the chart to make it easier for analysis. Now, for our style of trading, AOL is not a buy throughout all of 2011 here, as the 200-day moving average is sloping lower and the 50-day moving average is below the 200. Now, as we progress through 2011 and into 2012, we see that around February 24th, the 50-day moving average crosses through the 200-day moving average. Now, this is a bullish crossover, and the stock is still not buyable at this point, but this is a bullish sign of a trend reversal. As we get into April and May, we then start to see a chart that we like to look at here, where the 200-day MA is sloping higher along with the 50 and 20. All moving averages are pointing in the right direction. As you can see, AOL breaks out above the highs of a base here, and the moving averages are still pointing in the same direction, which is a sign of a healthy uptrend. In AOL's case, when the 20-day moving average stays above the 50 during a consolidation period, this is a very bullish sign, showing that the price action is extremely tight. And those are the type of bases that we want to trade. Now I'm going to show you an example of a stock that is topping out and what the moving averages kind of look like, to give you an idea of what we try to stay away from. And the decent example of this is an AKAM. As we see here, all three moving averages were pointing in the same direction in June of 2010, and then the price action started to dip below the 50-day moving average more frequently. And as we can see here, by late January, the 50-day moving average has stalled out now and is just trending sideways, and the price action is below the 50 MA for several weeks, which is not a good sign. And then on February 10th, AKM gaps down below the 200-day moving average, the 20 crosses below the 200, and then the 50 crosses below a little bit later on March 2nd. So now we have a stock that is trending in the wrong direction as far as the moving averages are concerned. And you can see it roll over here and continue to sell off with all three moving averages pointing in the wrong direction. This is exactly what we do not want to see when we're buying stocks. Well, there you have it, a quick analysis on how we use the moving averages to identify strength of trend. To receive more analysis like this on a daily basis, please sign up for our exclusive newsletter at morpheustrading.com. Thank you for joining us today. Good luck with your trading. We'll see you again with the next Morpheus Trading Group Daily Stock Pick video.